Hello, everybody. My guest today is Robin Mellstrand. He's the CEO and co-founder of an award-winning and quickly expanding startup called Loop 54. He holds a master's degree in industrial engineering and management and has been into sales his whole career prior to Loop 45. Loop 54, which one is it? Is it Loop 54 or 45?
54.
54, good. He currently lives in Stockholm, Sweden, together with his girlfriend and judgmental dog. Robin, are you ready to take us to the top?
Yep, I'm ready.
All right. So tell us about the company. What does Loop 54 do and how do you make revenue?
So we do search and navigation for retailers around the world, and we basically increase the conversions and revenue online, and they pay us via a subscription model.
Okay, so it's a pure play SaaS model.
Yeah, definitely. We deliver it as an API.
What do they pay on? Like, give me a general sense on average what they pay per year or per month.
So on average, we have $30K per year, US dollars.
Okay, so about $2,500 a month, and they're basically buying what, a number of API calls?
Yeah, more or less, and then you can buy depending on which features you choose. If you just do search, and if you have the whole category structure being delivered by us, you pay a bit differently. But yeah, more or less, it's mostly volume.
Okay, so just so we can get a real stranglehold on what the company does, can you give me an example of how a customer is currently using it? Actually, name the customer and the use case.
Yeah, sure. We work with Office Depot here in the Nordics, as well as like the largest grocery chains. And if you go to Co-op, which is a big grocery chain in the Nordics, other parts of the world as well, you go search for orange. Like a human has a very easy time figuring out what orange means, right? But for a computer, that is exceptionally hard. Orange, it could be a fruit, a taste, a color, or a telecom operator in France, right? So there's big ambiguity to that word. What do you actually mean? A human figures out instantly that if you're in a food store, you're asking for orange. In that context, you obviously mean the fruit. But for a computer, that's much harder to do that automatically. So a lot of search implementations today is actually done with a lot of manual work, adding in custom sorting, adding in synonyms, adding in redirects to the right content pages. So basically today is the truth that if the one to put the most time and money on the search is one is going to have the best solution. But we managed to build a solution that learns automatically and optimizes automatically without you having to do anything.
So Robin, though, tell me specifically how Office Depot used it. Like do I go to officedepot.com? Where am I going to see your software in action?
So this is we are based in the Nordics and we are growing in the UK. We don't have any clients in the US right now. So this is on Office Depot's Swedish site just now.
Okay, so I'm there. So where do I see your stuff?
Well, just in the search box. You don't really see it. So we are just the algorithms that deliver the search results. Okay,
so I'm going to search pen black gel ink. What do you do then?
Probably not going to yield a bunch of results since all this catalog is in Swedish, right?
Okay, let's say I type that in Swedish.
Yeah, then it's going to figure out what is your underlying intent, what do other people who search for similar things mean, and give you the best possible results for each and every query.
Okay, so you're like an e-commerce search engine.
Yeah, more or less, yeah.
Interesting. And then that would count as one query in terms of Office Depot's paying you for 1 million queries a year at $30,000 ACV?
Yeah, more or less.
Interesting. Okay. Before I get more of the backstory, so what have you scaled to today? How many total customers are you working with?
We have 130 clients and we are $3 million ARR, or 3.1 maybe.
Okay, so 3.1 today. And are you growing? What were you at about, call it 16 months ago?
16 months ago.
Or sorry, 12 months ago.
That's easier. We're at 1.6, I think.
Okay, so like December 2016, you're at about 1.6 million in ARR. So you've doubled almost, more than doubled.
Yeah, exactly. More or less.
That's great. And you said you're 3.1 today, right?
Yeah.
Okay, wonderful. Let's get more of the backstory here. When did you launch the company?
Long story. So this wasn't actually a search company from the beginning. We actually launched it as a web consultancy, me and the two other founders. It was a mathematician and a programmer. It didn't go really well since we didn't really know how to sell the mathematician services. So he basically had a lot of time on his hands. And this was back in 2011. So he basically ended up, he's done one sale in the company's history, and he talked like a company called Vodler, which is basically the local copy of Netflix, if you would say back then. They don't exist anymore. And he pitched them saying that, yeah, I can build you the exact same recommendation engine that Netflix has, because back then everything was in white papers, was a big buzz around that about 6 or 7 years ago.
Okay, so you said 2012?
2011, I think. So, and he said, yeah, I can build the same recommendation engine as they had. And he did, and obviously worked really well on Netflix data, public data. Problem is that all of these kind of algorithms are built around you having massive amounts of user data. So they're a global company, and they have lots of behavior data, basically. So it worked perfectly for them. But when we implemented it at Bottler, everything fell apart because they're a regional company with not as much data as everyone else. And then all the theory behind this algorithm fell together, basically. So we gave them the product saying, this is how you do it, use it when you get bigger. And then afterwards, since we didn't have a new project for our mathematician, he sat down and thought, all right, is there any way else I can understand how products fit together without knowing anything about the users? So he applied new type of mathematical research in this particular problem and found a way to do that. Long story short, it turned out to be quite a horrible recommendation engine still, but the beginning to a really interesting search engine.
Yeah. So how many, I mean, your system gets smarter the more it gets used because you can do pattern recognition. How many queries did you guys process over the past 12 months across all your base?
Yeah, right now we have about 1 billion a month.
Okay, so fairly significant. So you're now not just going in blind. You also maybe have historical cart data on, people put the Post-it notes with the black pen. So if they search black pen, show them Post-it notes to increase cart checkout by 130%.
Yeah, sure.
Interesting. Okay, so you launched the company. Now, when did you officially move from an agency to the Sass platform all in?
We really did a bit of trial and error a couple of years, and we launched it middle of 2013. And then we changed the name of the company. We sold off the customer stock for peanuts because, wasn't worth anything.
You sold off the what?
The customer stock for the consultancy just handed that off to someone else to continue that work.
What was that company do? What was the consultancy doing at its height? Like $1 million a year, $2 million?
Oh, not even that.
Okay.
Almost nothing. I think we sold it for $2,000 and a case of beer.
So it's easy for you to give it up.
Yes. No particular emotions attached.
That's funny. Okay. And now fast, you're scaling 2013, you fully shift over. Have you raised today or are you bootstrapped?
Yeah, we were bootstrapped for the first 2 years. But now we have raised.
How much?
In total, around $3 million.
And why did you decide to raise?
Because we think that we have a solution we have found a solution to search, basically, in this particular context. A lot of people are trying to do what we're doing, but we have a solution for this. But that's not always going to be the case. This is an area that is heavily invested in right now, and there's going to be a consolidation of technologies in the upcoming years. Either we are a victim to that consolidation wave or we drive it. So, and if we grow organically, we will be probably the best search provider in Stockholm, but that won't matter too much in a couple of years.
Yep. So you're expanding to the States today and things like that, or what?
Right now, focusing on the UK and later Germany. And for the next financing round, we're going to focus on the US.
Interesting. When did you raise that $3 million?
So we raised it over 2 years, 2 times, just from the current owners. First, end of 2015, and then a smaller amount again this year.
Okay. And what do you mean?
Last year.
You said you raised from the current founders. I thought you were the founder.
No, current owners.
People who are already invested.
Yeah, exactly.
Got it. Okay. Makes good sense. Now, tell me about churn.
So we had, I believe, 6% churn in total last year.
At logo basis or revenue basis?
Revenue basis.
Okay. And that was gross churn, I imagine, but you probably drove expansion revenue. Do you have over 100% net revenue retention?
Yeah, I think we're at 100.5%.
Just barely.
Yeah.
100.5 net revenue retention annually. That's pretty good. And what does the team size look like?
We are 27 people right now.
And I'm asking this because I'm curious, how many of those folks are dedicated towards upselling to drive that, again, net revenue retention number up?
That's an interesting question because we didn't even have the opportunity to upsell until 4 months ago. So that NRR is purely based on the organic growth of the industry. So because our pricing model was purely based on volume before. You basically get every feature we had and to a fixed price depending on volume. So, but then we changed that 4 months ago, and we are right now trying to implement upsell, handled by the customer success team and the sales team.
What are you looking at other economics related to one of these sales? What are you paying to acquire these customers, fully weighted?
So that obviously depends a lot month to month, depending on how many salespeople we have currently and how many of them are ramped. But on average, we are looking at a CAC PP of 10.9 months. So we are on average. Last year, we paid $20,000 to acquire a customer.
Yep, and you're getting paid back in time. So $30,000 ACV costs you, call it $20,000 to acquire the customer, which is where you get your 10.9 month payback period.
more or less, yeah.
Yep. Interesting. What do you assume lifetime value is on these guys?
So depending on how you count the lifetime value, if you just look at our gross churn, our lifetime value is like $400,000 per client, right? So we don't know what the actual lifetime value is. If you just look at the 7% yearly churn, that gives you a really fun number. But if that corresponds to the truth, we're not sure yet.
Yeah, it's hard because if you just divide by your churn number to get how many months they stay with you, then multiply times your monthly ARPU, it can lie to you and be very big, very quick.
Exactly. So I believe so we are just now getting to scale where we actually can use quantitative data, but until we get quantitative on the actual lifetime value of the customer, I think that's still some years off.
Yeah, it's hard. I mean, I always wonder how valuable lifetime value is to actually use, because ultimately the biggest changer of lifetime values in companies is some market shift you didn't see coming.
Yeah,
right.
Exactly.
And it drives your churn way up in a given month, and you couldn't predict it, and a pro forma is never going to tell you. So I don't know how valuable really lifetime value is, and outside of investors like hearing it and to analyze.
Exactly. So what lifetime value really is your ARPU and your churn in another way.
Yeah, but even what I'm saying though is even that, right? Even if you take $1,000 a month and you're only churning 2% per year, so they're going to stay with you for what is that, 50, right? 50 months or 100 months times 1,000. I mean, it can lie to you because 2 years from now something might change that screws up your whole business.
Exactly. This.
It's hard, which is hard to predict. So interesting. Okay, are there any other metrics you're looking at on a weekly or monthly basis I haven't asked about?
So we're looking at the MRR, of course, the net MRR growth, and of course, the CAC PP is one of the most important for us to understand how efficient we are. And there's a bunch of those really popular metrics right now, like the Sass magic number, for instance.
What's your magic number?
0.9.
Okay, and explain to people what that is.
So basically, you look at how much you invested in sales and marketing the previous quarter and how much your revenue increase was this quarter. It's basically a division about that.
Yep. So just to be clear, if you invest a bunch in January and February and March, you're going to say, okay, I invested $100,000. That's the sales salaries. That's any direct paid spend, et cetera, anything on sales. And then you say, okay, that money has to kind of be into the company, and it's going to take some time to drive the customer growth. So the next 3 months after that, right? April, May, June, see how much MRR increases and then divide the two.
Exactly.
Yep. Exactly. And that's MRR or ARR?
In what?
So let's say you spend $100,000, and in the next 3 months, MRR goes up by $10,000 a month. Do you use $10,000 a month or $120,000 multiply out for the ARR number?
You look at the monthly level, at the MRR level. Yeah.
Okay. So what's the division? I have $10,000 new MRR and $100,000 invested.
Yeah. So there's a ×4 on the investment, and you also look at your gross revenue increase after you remove your gross cost of delivering the product.
Yep. So what am I multiplying by gross margin? The $10,000?
Yeah, exactly.
Okay, so let's say $10,000 times 85%. That's a typical SaaS gross margin, right? So we're down to $8,500.
Yeah.
Then what?
No, you basically.
I'm putting you on the spot here so that the audience can learn.
Exactly. I'm trying to remember. It feels a bit like a test. But I think it is. You put your total. You put your total increase in revenue times gross revenue times 4, and divide that by your marketing and sales spend, and then you get then that quota is the magic number. And if you are above 1, you're doing fantastically great. If you are below 0.8, you may not have a product market fit yet.
Yeah,
you may have to think about more. You should think about if you really should invest in sales and marketing at that point, because you may not be as efficient as it should be.
Yep. So just to be clear, if I take 8,500, which is how much MRR grew over the 3 months, multiplied by 4, that's going to give me $34,000. That's basically an ARR number essentially. And then I take $100,000, which was the investment, times 4. That's $400,000. You're saying take $34,000, the growth, divided by the cost, $400,000. That gives me 0.085. Is that good or bad?
Yeah, it's kind of good. You're still above the line 0.8, which is sort of the line where you should really rethink how you do things.
Yeah, well, just to be clear, this is actually really bad. It's 0.085, not 0.8. So it's really bad.
That's extremely bad.
Yeah. We want it to be 34 grand divided by 40 grand would give me 0.85, which would be decent.
Exactly.
Yeah. It basically, that magic number is basically just trying to help you figure out, do you get your money back in a year?
Yeah, exactly.
Yeah.
And for us, it's particularly important since we need to consistently understand, are we doing things efficiently enough? Are we good enough at what we do? Should we invest in this? Yep. And also looking at how does this actually differ from different markets? Since we're heading into UK, which is a significantly harder market to do business in than the Nordics. So how efficient are we? Do we acquire customers as efficient as we should be doing? And so on and so forth. It depends on how we look at our spend.
And where's the team based today?
So we have 24 in Stockholm and 3 people in London.
Okay, so Stockholm and London. Got it. All right, Robin, let's wrap up here with the famous 5. Number 1, what's the last business book you read?
I think it was The Hard Thing About Hard Things. A bit cliche maybe, but...
That's a good one. Number 2, is there a CEO you're following or studying right now?
It's almost always Jason Lemkins, founder of Ecommerce, among others.
Number 3, what's your favorite online tool for building a business?
For building business, I don't know, but right now I love Grammarly.
Yep, keep your spelling good, right? Number 4, how many hours of sleep do you get every night?
Yeah, I think I'm around 7, probably.
That's good. And what's your situation? Married, single, you have kids?
Single. I'm not married, but I'm not single. I have a girlfriend, don't have kids. A dog.
Okay, a dog, no kids, a judgmental dog, you said. And how old are you?
Yeah, I'm 31.
31. Last question. What do you wish your 20-year-old self knew, Robin?
I thought a bit about that and probably let go of those management consultancy career thoughts right now. They won't lead anywhere. It's not for you.
Let go of your career faster from Robin, who launched Loop 54. It's essentially search for e-commerce, right? And retail. Launched in 2011. The agency went all full in on Sass in 2013. Has scaled today to about 130 customers paying $30,000 ACVs. So doing about 260 grand per month in revenue, which is 3.1 million bucks in ARR. That's up from 1.6 million in ARR just 13 months ago. So over 100%, well, about 100% year over year growth, 6% revenue churn annually, and just over 100% in terms of net revenue retention, which is great. His team of 27 people out there in London and Stockholm building quickly. Robin, thank you for taking us to the top.
Thank you, Nathan. Great talking to you.